Past and an update on our top stories with the market in kind of wind-down mode now for the trading day, but certainly, well, there you can see no real ability to get out of this funk. You've got energy, you've got materials, you've got banks all on the back foot, and Woodside's held its AGM, it's holding it. Falls in the energy sector, not the best day to do that, even though there's some good news to emerge from Peter Coleman. Mixed news, but generally speaking, good steering of the ship thus far, talking about the outlook, supporting the developments further still now of that Browse resource. Let's also remind you too that Telstra's rallying hasn't let up on that measure. Certainly the decision by the ACCC, even though it's draft, inevitably plays into Telstra's hands and takes away future options for its competitors, if indeed it's locked in a few months' time, following a bit more consultation out there in the marketplace. Let's go live to Michael Kadari, meanwhile, from CoSec Kadari Securities. There we have it for you. Michael, that's not Michael Wayne, is it? That is the chief himself. Good to hear from you. Let's just sort of talk your views on the market today. How are you seeing it?
Carson, we've had a fourth consecutive negative day. You've had the US and China's manufacturing data come out this week, which was weaker than expected. You've got the US non-farm payrolls coming out tonight. You've got the French election on the weekend. You've had iron ore prices come out, which are quite interesting for those iron ore producers. So overall, a bit of uncertainty, volatility, but then again, it means opportunities.
This week, though, there's been a recasting on expectations, has there not, for the Big Four, to the extent that you've had, quite unusually, when it comes to the NAB, a sell slapped on it, plus an outperform by two different brokers. Now, that's not just a valuation call, that's as much a repeat of the first half into the second, a question mark from one and an affirmation from the other. Are you surprised at that?
Well, look, Carson, the banks have had a good run up until reporting in the past 6 months. You saw ANZ come out, sort of underperformed expectation. You've had Macquarie do quite well, outperform expectations, and you've had NAB sort of meet consensus. So where to from now? That's the big question. And, for us at the moment, we think the banks and the miners have had a great run in the past 6 months. In the past 3 months, we've seen the mid-cap index do much better than the ASX 200. So the money is shifting for us, and we think there's a big move away from the banks and miners towards the mid-cap sector.
Tell me about your current thinking on TPG, because you had been a true believer. Yeah. It's gone through, though, the ringer of late. Now, have you stayed the course? Have you moved off? And where to, if so?
Absolutely. Look, when it comes to the market, again, you want to pick good businesses, but having said that, timing is so important. So if I was to buy a stock today, I might sell it in the next 2-3 years, or I might sell it in the next 2-3 months. TPG, great business. They've acquired a lot. They're looking to, expand, increase their margins. But at the moment, that telco sector is quite uncertain. The news that came out with Telstra, for example, I mean, they're looking to maintain their competitive advantage, which again has affected the share price for TPG. So TPG, good business if you've got a long-term view, but at the moment, if you're looking to make money, there's other businesses out there that you can certainly take advantage of.
All right, staying in the sector, silence kind of is audible. Pun intended, on the whole idea of Vocus, because you talked about TPG and the acquisitive abilities that it has. There was a time where Vocus was being trumpeted, and then it kind of flew too close to the sun, did it not?
I remember being on the show and talking about Vocus rhyming with hocus and pocus.
Right.
At the time they were doing a lot of these acquisitions. Yeah. And in fact, I got a lot of flack at the AGM because I went along and described it the same way.
Right.
But what Vocus really did is it it went on a major acquisition trail. They put two companies into a hat together, one called Vocus and one called M2 Telecommunications. They each had a pile of assets, and when they took them out the hat and put it into the balance sheet, the assets were far greater than the sum of the two things that went in. And now, accounting-wise, it was absolutely accurate, nothing dishonest about it, but anybody who understands business would say, how can you take two sets of assets, put them into a hat, take them out the hat one day later as a merged company, and suddenly your assets are several $1 billion higher, and that was only going to land up in grief for shareholders over time, which it has.
Well, intriguing. Speaking of which, Michael, back on you, Michael Kothari, the issue on, speaking of things ending up in grief, this was the week where we had, of course, the big splash for two medical marijuana companies, and we saw dizzying numbers even just yesterday. They both basically launched in tandem with one another. So, if, you know, it kind of doesn't rain, it pours in that regard. Are you minded to say longer term, to your point earlier, that this one has legs, notwithstanding the volatility of an early listing?
Look, I mean, volatility is great if you're looking at the right sectors, the right businesses. I mean, if there's no volatility in the market, no one's going to make money. It's those sort of opportunities you want to take advantage of. So, you know, we saw the volatility with companies like A2 Milk, you know, your Blackmores, your Bellamy's. I mean, it was pretty much a no-brainer, you know, getting in when, you know, the announcement came from offshore with China and their, you know, they're changing regulations around. So, you know, volatility is great. Within that sector, we don't operate at this stage. No, we're not buying those sort of businesses. We're looking more at this stage into, let's say, the gold producers. And
that's really interesting because, I mean, across the... So, OK, because we know the difference, Australian dollar term gold production performance versus the global price, which in 12 months has pretty much done nothing. So if that's the big picture for the global gold producers to be working to, how do you counter that thesis, that globally the price has stayed the same, only in Australian dollar terms do the producers wring out some value?
One of the interesting things to me, having grown up in South Africa, which used to produce 75% of all the world's gold when I lived there, there was always an enormous amount of talk about the gold price and gold shares in South Africa because so much of our economy depended on it at the time. But if you look at the gold price, which is supposed to be a hedge against inflation, and you look at it over a long enough period, in actual fact, it has always underperformed inflation. And what's worse, it doesn't pay you any dividends. So these are capital-intensive companies that don't generally pay dividends. They want to, they do, but very rarely do they. And the gold itself is an asset that never pays you anything for owning it. Gold has been a pretty poor investment over all the years, but I've always heard people going to make lots of money out of gold.
All right, Michael Kothari, response to that?
Look, I think Howard has a great way of putting things in very simple terms for people to understand, and, you know, genius is in simplicity. But, you know, I do agree long term. Look, if the gold price moves up 0.51%, if you're in a business that actually produces gold at a cheaper rate, you know, at this stage we're looking at companies that are producing gold in Australian dollars and selling it in US dollars. We've seen a lot of sort of tension with the Australian dollar coming down, which does create that opportunity there. Howard's point to, you know, gold doesn't pay you a dividend. Most gold producers don't. And one that we have...
One or two do.
Woodside?
Yeah, yeah. One that we have, you know, pays about a 2.2% dividend yield, has no debts. It's one of the highest grades in terms of gold production, and you know, it's producing gold around $900 to $1,000 an ounce. Now, long term, would I be holding a gold stock? Short term, with the volatility that's going on geopolitically with Syria, North Korea, and having a leader like Donald Trump, which you know, he's not the most conservative and predictable, it does create opportunities in that sort of sector, and with certain businesses, which, you know, if I was to make a 5% return in the next few weeks, I'll be quite happy with.
It's interesting, though, isn't it? Because, OK, so that's your horizon, because I'm just trying to get a handle on, you know, when you're talking time horizons on these things. You know, North Korea was rumbling when you had Barack Obama in the White House, never mind Donald Trump. He left a note to say, this will be your biggest problem, Donald.
And I lived through when the world was waiting for nuclear weapons to rain down in the Cuban crisis.
So it's always kind of held up as a...
You know, I don't actually remember in the nearly 70 years that I've been on this earth any time when there wasn't some major panic going on somewhere in the world. And obviously, as Michael says, that creates opportunities. I suppose the difference is you have to decide what you really are. If you're a long-term investor, as our members of Team Invest are, you look beyond, and they're old enough that they've seen this all before, they look beyond the short-term horizons. If you tend to be more interested in the short term, that's fine, as long as you know that you're not really an investor, you're speculating on changes that are happening. Now, that doesn't mean you can't make lots of money doing that, but our members being a bit more conservative, knowing a lot about how businesses operate, knowing how the long term is far more important than the short term among our Team Invest members, we tend to look long term. But that doesn't mean other people can't look short term.
I'm keen to get to apply that logic back on you, Michael Kidari. The notion this week, again, it has the regulator in on the story, but it is, as it applies to outdoor advertising, a blow or a boom, actually, for oOh!media and APN Outdoor. Brokers today seem somewhat mixed, but there's not necessarily a lingering concern. They can probably still carry on as they have been, which is pretty A-OK.
Yeah. Look, it's one of the sort of industries where you know, it is hard to operate in. You know, it is. I mean, a lot of those two businesses own a lot of the market share. But you know, going forward, projecting and saying, you know, is it a stock that we can buy where we can make good money from in the next 2, 3 months or 6 months period? It's not two sort of businesses we're looking at this stage. But, you know, taking that point across, I mean, you know, picking good businesses is great. And in the past, you know, 5 years, you know, we've picked some of the best businesses like, you know, Cockley, ResMeds, Certex, TPGs, your Domino's pizzas. But at this stage in the markets, you know, with the volatility that we have, sometimes there's opportunities where you can make money quicker. It's all about knowing where to move the money with all the macroeconomic data that comes
And for the last 50 years, there have been tens of thousands, probably millions of people around the world who've been going to make money quicker than Warren Buffett. And Warren Buffett, who looks long-term, has, over that long-term, managed to beat all of them. There's all the evidence over all the research that's been done for decades is the investors who make the most money are the ones who look long term. Now, that doesn't mean you can't make money short term, and different people enjoy doing things differently. Even among our Team Invest members, there are a few of them that quite like looking short term. But as a general rule, they've been around longer and they prefer the long term.
Well, you've got the two different views.
Absolutely. That's what makes the market.
Exactly, and that's what makes it so dynamic. Michael Kidari, thank you so much for joining us today. Didn't expect you, but great to have you with us.
Thank you.
Couldn't believe it. Looked into the screen. There he was from Kosa Kidari. There, nice to get in on that discussion with you as well, Howard, too. Let's take a break. More with Howard. Final segment territory. So what he's looking into for next week. And if you are quick, you might just get it on the phone lines. 1300 30 34 35. Back next.